welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. We're coming to you live from Miami at Exchange, an ETF experience where we're meeting with the top thought leaders and innovators in the ETF space. Joining us for this segment with Ryan McCormack, Factor and Core Equity Strategist over at Invesco. We're going to take a look at inflows with QQQs and some other product, and also get some outlook as well. Ryan, it's great to see you in person. I know we're on together remotely each week, but it is great to finally be with you at the table here. Let's talk about QQQ inflows and QQQM.
Yeah, it's fantastic to be here, first of all. But I think when you look at QQQ inflows, they've been very streaky this year, right? We've seen very large outflows, very large inflows. I mean, the month of March alone, we saw $6 billion in inflows come in. And I think behind that, there's just such a diverse investor base that exists within QQQ. Beyond the retail, kind of long-term, long-only investors, you have a lot of the kind of fast money or institutionally geared investors that will sometimes use Qs as a growth proxy and move between QQQ, options on QQQ, Nasdaq 100 options, the micros, the futures. So there's a lot of movement that can impact kind of what that flow picture looks like. So it can seem a little bit streaky at times. Yeah, I think like probably the better barometer of what the retail mindset is on Nasdaq 100 would be what we've seen in QQQM, which is pretty consistent inflows, nearly $1 billion this year to date. And if you recall, QQQM also tracking Nasdaq 100 just in a more retail-friendly wrap.
It's also equal weighted too, correct? So it does it.
No, tracking Nasdaq 100 as the index is designed. But the difference is it's 5 basis points cheaper in expense ratio, should help the retail investor over time. And then, some dividend reinvestment at the fund level, securities lending, which can keep expenses down, and at a lower NAV.
How should investors be thinking about the Qs in 2022?
Yeah, so I think it's always going to be kind of your large cap growth arena. I think if you look at the volatility that we've seen this year, it gives some folks pause. I mean, as of yesterday, down 14% year to date. But as we look last year, Qs was down nearly 11% from February to March. And I like to joke, not a lot of people bring that up, because for 2021, we ended up over 27% for the year. So volatility is very normal. I think it's very healthy for the market. And for those looking to allocate to large growth, QQQ remains the choice.
And this is my favorite stat. Let's talk about R&D expense in QQQ companies.
Yeah, my favorite stat as well. We think that the commitment to R&D is what fuels innovation, right? And by extension, these innovative products, services is really what drives the fundamental growth picture that we've seen in QQQ for the better part of the last 10 years. So for 2021, again, those QQQ companies showed their commitment to research and development. On average, on a weighted average basis, $13.1 billion reinvested back into their companies through R&D, which represents over 10% of sales. So not a small commitment from these companies to take that amount of money and reinvest it, redeploy it into kind of developing that new world of products, services, or expanding on existing ones.
All right, Ryan, appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.